China National Offshore Oil Corporation, the CNOOC, announced Tuesday that it has closed a deal to acquire Canada's Nexen Incorporated, marking the biggest overseas acquisition made by a Chinese company ever. CNOOC, China's largest offshore oil and gas producer, said in a statement on its website it purchased Nexen's common and preferred shares with a total worth of $15.1 billion. In what may be the final stock market report, CNOOC now owns the Long Lake and Syncrude oil sands stakes in Alberta, which were Nexen's assets in the Athabasca oil sands, the world's third largest crude deposit in barrel equivalent. Kevin Reinhardt will continue to serve as chief executive of Nexen, which will operate as a subsidiary. Nexen confirmed the completion of the acquisition in a statement, noting that its shareholders had received $27.50 per share, a gain of $10 compared to the day before the announcement of the transaction in July. Nexen said it would be retired from the Toronto Stock Exchange in the coming days. Now, with the Canadian deal approved and finalized, Chesapeake Energy may have to give a tip of the hat to Canada. $1 billion joint venture with Sinopec. Chesapeake CEO Aubrey McClendon said that the company marketed its Mississippi lime acres for nearly a year to Asian buyers, but a potential deal suffered from worries about regulators being squeamish about selling more U.S. energy assets to companies run by the Chinese government. The stamp of approval that the Canadian government put on CNOOC's end might have calmed those fears.